Hi, this is James Shug with Westpac London's end of day report for Friday the 7th of September. Well, European markets had another good day today. They built upon yesterday's Mario Draghi bond buying plan inspired gains with strong industrial production numbers in the UK, in Germany, and also German export figures which posted a rise. These are all July figures. Adding to the sense that although there's a slowdown clearly taking place, it's only a mild one. Now the UK industrial production figures jumped because they fell very sharply in June because there were two public holidays in June for the Jubilee that they normally would not be. So that's a one-off factor driving that. But the German numbers looked reasonably genuine, although a bit disappointing that exports didn't match the pace of industrial gain. But then the other big news today was the release of the non-farm payrolls report, or jobs report for August for the US. Came in at 96,000, the increase in August, and July was revised, or June and July revised down by 41,000. Now our forecast was that it would come in at an 80,000 increase with downward revisions to the July numbers, so pretty much in line with our forecast, which was right at the bottom end of the range, particularly after earlier in the week we had that 200,000 increase in the ADP private measure of payroll growth in America. I mean, we don't have any respect at all really for the first estimate of payrolls as a realistic guide to what's currently going on in the labour market, but when it agrees with your view, which is that the US economy is struggling, we accept it at face value. Some of the detail in the report was disappointing. Basically, after I've looked at my notes, but the average pace of jobs growth over the 4-month period, May to August, is now just 92,000, down from 186,000 in the first 4 months of this year. And that pretty much mirrors what happened last year when we had a jobs growth averaging 200,000 in the first 4 months of 2011, then it slowed to 80,000 in the second third of 2011. Of course, what happened then was the economy kicked in again a bit and jobs picked up in the latter part of 2011, only to slow down again as we're seeing at the moment. The key question for policymakers is, does the economy accelerate again from here? If it does it fall over again early next year, or is it running at around about the pace now that we can really only hope at best to expect? Our view at Westpac is the latter, or the last of those, that the US is going to struggle really to grow at 2%, and if fiscal risks crystallise next year, it could be much weaker than that. So the jobs report is much more consistent with our view of where the US economy is at than the previous July report was, and other numbers like ADP earlier in the week. Canadian employment was up 34,000 in August, but that just reversed the prior month's fall. Even there, in the first 4 months of the year, jobs growth averaged, what was it, 30-odd thousand a month, averaging only about 5,000 a month in the most recent 4-month period. So as in the US, we've seen Canadian jobs slow down as well. That's about it in terms of the economic data today. On the markets, the London stock market's up 1/3%. The French market up 0.5% today. We've got the Germans up 0.75%. The Spanish market, which was up 5% yesterday, is off 0.04% today. But the Italian stock market up 2% today. Look, the other thing to mention, Spanish 10-year bond yields 5.5%. A month or so ago, they were 7.5%. Before Draghi spoke yesterday, they were 6.8, I think. So. He certainly inspired a significant rally, not just in stock markets, but in the long end of the bond market, which of course is where he won't be buying bonds. He'll only be buying bonds under his outright monetary transactions program in the 1 to 3 year part of the curve. Commodity markets today. Look, oil prices off about 1/4% at $95.26 a barrel, but gold's up 2%. And copper's up 3% today, and the Aussie dollar is just under 1.04 against the US dollar. Rose a cent today and a cent yesterday. So the Aussie dollar's doing pretty well at the moment. All right, that's it for today. That's it for the first week of September. We'll be back next week.